Are you comfortable giving us a Bitcoin prediction this run?
Oh
Price
yeah,
prediction?
absolutely. Absolutely.
Okay, let's go for it.
So, one tweet I sent out that would probably help people understand this prediction is the value versus price versus cost. Because what we have to understand is, and I think maybe it'll be better if I first talk about gold, because I think there's a little bit of a fallacy in here when we talk about price predictions. So what do I mean by this? Okay. Well, most people who buy gold, they buy it with the idea that it's worth its monetary value. So the gold actually has two prices, just like Bitcoin. It has a commodity value and it has a monetary value. And actually, yeah, you can, Adam, if you
Is,
can leave that
is
chart
this
up, because I'll
the one you wanted to bring up?
absolutely, I would like to talk about that in a
Yeah,
second as soon as I
no worries.
finish this.
Yeah.
So there's a commodity value and there's a monetary value. Now, people buy gold with the idea that it should be worth its monetary value. You know, gold's $2,000 an ounce, but it should be $50,000 an ounce. Well, $50,000 is its monetary value. So if you take global GDP and you divide it by the amount of ounces of gold in the world, it should be around $50,000 an ounce. But here's the problem: not everybody is using gold as money. Gold is not money, so it's not at its monetary value because it's not money. Now, if it was being used as money, then it would be at its monetary value. But it's being used by the jeweler, it's being used by the dentist. It's at its commodity value. So what does that mean? That means that it's trading for a price slightly above its cost of production. Or in gold, they call it an all-in sustaining cost, which is actually another interesting topic, because I've been working on a proposal to Michael Saylor and the Bitcoin Mining Council to implement an all-in sustaining costs structure analysis into our industry based on my algorithm you see on the screen right there, Bitcoin fair value. Now, what's really interesting is if you look at this orange line, that's Bitcoin fair value. Now, this is a proprietary algorithm, but I published the variables. So I'll define what the variables are. There's 5 of them. The first is cost of production. We're talking about the electrical costs, or in other words, OPEX, and we're talking about all-in cost, or CapEx. So those two numbers create a range for cost of production. Like we talked about earlier, it's kind of hard to put your finger on the exact cost because it varies so much between producers. So we have a range: electrical cost versus all-in cost. The second variable is called Bitcoin energy value. Now, this is just the valuation based on the amount of joules that are being used by the network in terms of dollars. The next thing is called network value to transaction ratio. This means the amount of money that's being transferred on the network divided by the amount of existing coins. That gives you a number for network, or for MVT, they call it. And the last is stock to flow. So typically we see these. I mean, if you look at that orange line, if you go back into my, keep this screen up, but for people who are going onto my Twitter, you go down this rabbit hole, you'll see that in one of my tweets, shortly after the ETF, you see where the ETF launched and the price just cratered down towards the red line, and BFV just started going up in a straight line. And I was saying to myself, I said, I think something's broken. Why is BFV just going? Why is it going straight up? Like, I gotta try to debug this. Something's going on, because it shouldn't just be going straight up like that. That is just, what the heck is happening here? Well, when I took a deeper dive and looked into the script itself, I found that nothing is broken. So you see this massive divergence. The ETF was launched, price crashed from 44 all the way, or yeah, from that 46 level all the way down to 40 level. At the same time, there was a divergence. BFV started going up. And I told people, I said, hey, something's happening here. And when you look at the numbers, what's happening is, yes, the hash rate has been going up and difficulty's been increasing. So our cost of production variables are increasing. But where we're really getting a big push on BFV is network value transaction ratio, the MVT. The amount of liquidity flowing into the marketplace from these ETFs, and then that demand being on spot Bitcoin, and then that spot Bitcoin being moved from wherever they bought it from to the custodial wallet, that's increasing the transaction volume that the network is transferring. And these ETFs have provided so much influx of liquidity that is pushing BFV up along with the network and difficulty continuing to rise exponentially as well. But typically you get a rise in BFV after the halving because the stock to flow ratio changes after the halving. So stock to flow is a great metric. Bitcoin's inflation schedule will actually be harder than gold's after this halving. And stock to flow is a number that is designed to give you like a baseline based on the stock to flow, based on that inflation rate. So it's really good, but it's kind of hard to use by itself. So when you mix it in with these other variables, it becomes extremely valuable. But what's going to happen is right now the stock to flow variable is around 100,000, and it's been that way since 2020. Well, after the halving, that stock to flow is going to go up exponentially. It's going to go up close to $1 million. So that's going to affect BFV as well. And after the halving, you get a big move in BFV, like that orange line you see, typically after the halving. We're getting it before the halving. So the way I like to say is that the halving is like the supply side of the equation, right? It's a supply shock. And then the consistent demand against the reduced supply eventually forces the price up. But now, during this cycle, you said it earlier, something is different. Yeah, we're getting a demand shock and we're going into a supply shock. We're going to get positive price pressure from both sides of the equation. And you can see here, it formed that divergence. BFV was going up, price was going down. And I was telling people, hey, BFV is going up. Don't fade Bitcoin fair value. Whatever you do, don't fade BFV. And it's just really interesting that price shot up right to BFV. And now we're finally cooling down here a little bit. So I expect, you see there, it says fair value range. Fair value range is 10% above and 10% below what the fair value number actually is. That is what I call the fair value range. And that is the range that I would anticipate to be in as we go into the halving. Even if we come below it or go above it before the halving, I still believe we're going to be in the Bitcoin fair value range at the time of the halving. And now that range can change because BFV changes daily, right? Every single day BFV changes. And right now we just had a negative difficulty adjustment. So that should help reduce some of the cost of production variables. But when you look at this today, BFV, even after the negative difficulty adjustment, is still going up. And it's still going up because the demand side is just so overpowering with the amount of liquidity that's moving on chain from these Bitcoin ETFs. So we can continue to see this big move up. So I anticipate the price of Bitcoin going into the halving will be in the Bitcoin fair value range. Now you can follow me on Twitter and you can follow my Bitcoin fair value account on Twitter and follow along to see how this works out. Now let's talk about the bull market, right? Because I had some people call me, they're like, can you believe it? This bull market has been great. I'm like, this is not a bull market. We're still recovering, dude. The bull market hasn't even started yet. Bitcoin's not even recovered fully. It hasn't even put in a new all-time high. What are you talking about, bull market? The bull market hasn't even started. And what happens during the bull market is we move into the premium range. So what you see here is when price was below the orange line, that was a discount range. And then when it came up close to the orange line, the reason you see those green dots there that say buy, buy, buy was because it went down below 10%. So all those times back before there, every single day, Bitcoin fair value for 586 days was signaling to us to buy. There were a couple times where we finally broke back into fair value here, and then it dropped out of fair value. So then it re-triggered the buy signal, because I don't like having a whole bunch of green dots during the whole bear market. It skews the chart, so that it re-triggered those buy signals once it breached into fair value and then came back into discount range. Now we're in fair value range. In the bull market, you go into premium range. So market price trades at a premium to the fair value. And that's what we're going to see. Now, when we talk about premiums, let's talk about diminishing returns. Why have we seen diminishing returns? Here's my thesis. These publicly traded miners have a fiduciary responsibility to their shareholders. When these premiums get up to 50, 60, 70, even 100%, the miners will have a responsibility to lock in profits. Back in the 2016 halving, when I first started mining, the people that I networked with, they were like, they didn't care. Yeah, they were forced sellers, but they've been stacking for so long. They really didn't have to sell. And a lot of the mining operations were on a personal level or just a couple buddies together who started a limited partnership or something like that. It wasn't on a corporate, publicly traded level. So I believe these publicly traded mining companies who have a fiduciary responsibility to lock in profits are actually the reason for diminishing returns, because it limits the amount of profit that they leave on the table. When you got 50, 60, 70% profit margins, they almost have to start selling their treasury. They have to start locking in profits, or else they could get in trouble, because it's irresponsible to not do that. And for that reason, I'm looking to the, I would say, 300% premium range. So I anticipate the peak of Bitcoin price during the bull market to be around 300% more than Bitcoin fair value. Now, remember, Bitcoin fair value right now is 60,000, but after the halving, it's going to go up substantially. After the halving, I anticipate at least 6 digits. So just for the sake of math, call it 100,000. Well, I'm thinking 300% above that is going to be around the maximum premium peak for this cycle. And that's based on the commodity value. If for some reason we move to monetary value, so if trust is lost, right? Because you know me, Adam, I always say the difference between inflation and hyperinflation is trust. They can keep kicking the can down the road forever. The only time that it's ever going to not work is when the people finally lose trust. And when we lose trust, then Bitcoin will move from commodity value, which is the price based relative to its cost of production, to monetary value, to where the price is not going to be based on cost. Cost will infinitely be pushed towards value, but value is literally global GDP divided by 21 million. And global GDP is based on human production. So it's really infinity, right? That's where you get the infinity divided by 21 million, because the limit of human progress and ingenuity is limitless. So GDP is limitless. So you could say it both ways: global GDP divided by 21 million or infinity divided by 21 million. That's the monetary value of Bitcoin. That's the value proposition of something that is 50% of every transaction in the entire economy, the global economy. And that's the difference between my two predictions. If we're at commodity value, 300% premiums to BFV, probably somewhere around 300,000 to 400,000.
This cycle.
This cycle. If we're at monetary value and we see the move through the S-curve adoption, if fiat currencies start to fail and people lose trust, forget about this cost structure analysis, because we're now moving from commodity value to monetary value. And that's no price is going to be sufficient to settle that until you reach global GDP levels, which are, hundreds of millions of dollars per coin. In the long run, I think that's where we go, because that's the value proposition of Bitcoin. It is the global money-based layer. In the meantime, as we continue adoption and we continue to move up that S curve, it is going to be based on that commodity value, which is price relative to cost, which is based on premiums, which are limited by the cost basis of the miners, because they're the only forced sellers, right? The last piece of this is, yes, price can incentivize people to sell Bitcoin. However, the people who hold Bitcoin, if you're an individual, there is no reason for you to sell Bitcoin ever. If you want to tap into your trapped equity, borrow against your Bitcoin, because number one, you don't have to pay taxes. So if you sell your Bitcoin right off the bat here in the United States, if you held it for at least longer than a year, you're still getting hit with 20% capital gains long term.
Same as Australia.
So why would you sell your Bitcoin and give up 20% equity up front when you can just borrow against your Bitcoin for, say, 7 or 8%, and then whatever you invested in, just use cash flows to close the liability? Because at the end of it, you have whatever asset you wanted or whatever business you wanted, and you have your Bitcoin, and you didn't have to pay tax. So it's a win-win-win. And I think that the release of these products and services that add this extra level of sophistication around how we manage our money in Bitcoin, making it the most pristine form of collateral in the world, is going to change the supply-demand dynamic. No price is going to incentivize anybody to sell. It might incentivize you to borrow against it and take advantage of a real-world opportunity to generate cash flows, but it's not going to incentivize you to sell it and give up 20% equity to the tax man. So all of these dynamics come together in my price predictions. I hope everybody was able to keep up with that. I'm sorry if I lost you through it.